Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, I'm going to take you through the week ahead. We're going to look at some of the previous data as well. I'm going to chuck in a little bit of NFP because obviously it was a very interesting report. You know, there was a lot of signs towards that the Fed were looking at a weaker labour market, and we've started to potentially see that now. But what I found really interesting was the revised figures here. We can see that we actually revised last month's or the previous month's number from 303,000 to 315,000, which was very, very interesting. So in the next figures, would we potentially see a revision to the upside here? That's something that we need to keep an eye on. With regards to the non-farm payroll data, we saw average hourly earnings come down from 0.3% to 0.2%, and the unemployment rate climbed to 3.9%. So this was almost the perfect storm for dollar downside. Okay, so typically when you see a report and it has sort of all red, including the ISM services PMI that came out at 3 p.m, just kind of helped compound that weakness there, coming in below 50, showing that potential contraction there in the services PMI data. So the US dollar really took a beating last week. It kind of recovered a little bit towards the end of the week, the end of the session on Friday, but dollar was definitely on the downside. Now coming up this week, there's not a huge amount of US dollar data, so will the market kind of continue to drive dollar lower? That's something we will need to take a look at. Instead, we've got other central bank talk. We've got the RBA looking to hold interest rates at 4.35%. I think that's probably a likely thing to happen. We've also got the BoE that are looking to hold interest rates at 5.25%. We're actually covering this in an upcoming webinar soon, so keep your eyes out for that one. So yeah, BoE data, RBA data is in focus this week. We've also got GDP data out of the UK, and there's obviously some CAD employment data coming up this week as well. But very, very interesting leading into this week with regards to US dollar data. Now, the currency strength meter did try to point this out. Last week we saw a little bit of decline there. I actually felt fundamentally that with the data that was coming out in the US, it was going to go either way. I felt that the dollar had a little bit more upside in it. I was wrong on that front, and the US dollar did decline in line with the currency strength meter coming off those reversal levels, and it was trying to tell us that there was a potential underlying weakness here in the US dollar. Swiss franc, we were looking for longs. The Swiss franc was coming from a reversal zone, getting stronger, and that looks to be the case. So on the long side of things, we've got Swiss francs. On the short side, we've got the US dollar. Now going into the US dollar index then, so this is what I was looking for essentially, was a move into 107 before seeing any kind of move to the downside here. I did feel that 107 would be a point of resistance, or at least this weekly zone. This is a weekly chart of the US dollar index, and we can see obviously very strong bearish close last week, but we're now back at potential support. So you know, 105 is going to be the next point of interest. Do we hold above 105? Does price start moving back higher, or do we breach and do we start heading back towards 104s, even 103s? That's what's going to be looked at going into this trading week. Now if we look at it in terms of trend, especially on the euro dollar, so I've got a weekly chart here and I've got a 4-hour chart on the right hand side. Now if we look at it in terms of trend, you know, the market is making lower highs and lower lows, but we're in that sort of secondary phase of that move. So in that secondary phase, what you typically see from the H4 time frame is higher highs and higher lows. Now this was an interesting area yesterday. I actually tried to sorry, not yesterday, last week. I actually tried to get short here a couple of times, which I managed to do successfully. And as price breached that new low on the 4-hour time frame, I thought this is great. I think this is the move that I was kind of expecting down towards the 1.06. That wasn't to be the case. The data pushed price the other way. It came out better, worse for the US dollar, and the market has now breached higher. We've breached these kind of areas of minor resistance. Now, what's quite interesting about this, obviously, you know, like I said, we're in the secondary phase of a impulsive leg, okay, so of a downward trend, I would say anyway. So what I need to see here on the H4 time frame is the conditions to change again. Like I said, I thought that was happening here, it didn't follow through. I need to witness the kind of same things again. Do we get a consolidation? Maybe this 108 handle could be the point of resistance. Going on to cable then. So cable, obviously we've got Bank of England coming up. We're at a very crucial level. We're just trading below the 126 handle. Very similar to euro dollar last week. We were kind of in this 4-hour phase, and I said, well, if we want to be short cable, we need to wait for breaks below 1.2450. So we were out of this market because price continued to trade higher and above the 125, and now we're kind of sitting below 126. So again, looking at the sort of makeup of the market here on the weekly time frame, we've breached to the downside, we've tried to rally, we are now failing at lows. However, you know, what's interesting to me is I like to use sort of higher time frame stochastics, and I can see, look at the sort of stochastic here going from the oversold, potentially kind of giving us that idea that maybe, you know, we could see a breach higher. So I think anything above 126 could be fairly bullish, especially above 127 as well, which was the highs that formed from this aggressive leg to the downside. So I'm going to be watching 126 quite closely, because I think if we breach back above it and move to 127 is highly likely. A break above 127 could be seeing a complete reversal of this kind of weekly move that we're seeing here. Now, the last time we had a crossover and price kind of came back above from the oversold condition, we were technically in a downward trend at that point, and then price continued to push higher by, you know, at least another 400 to 500 pips. So that there is giving me an idea that maybe, you know, this 126 level could be a bit of a sticking point, but if it's not, a break above it could unleash a little bit more upside there. Going on to dollar CAD then. So dollar CAD, very similar. We did a discussion on dollar CAD. I liked longs above the 50 MA. I liked longs above these previous swing highs. Again, data dependent. I was looking at the pullback here, I was looking at ideas to get long, it just didn't form, and then price came and pushed all the way back down to the sort of trend line, which was resistance here, turn support, back into that 136 handle, which was something that we also discussed. You know, I did like the idea of price reaching 136 before seeing any kind of upside movement here. Now obviously you can see price did react fairly positive off of this level. Buyers did step in here. Weekly, technically again still above 136 handle, and to me that is a potential sign that price could continue higher. I think it's going to depend on whether we get almost a continuation of the dollar bearishness that we saw last week or not. You know, is the market going to take a slight breather on that and reflect on maybe the revisions in the market that we saw? You know, again, underlying condition here, we've had a bit of a crossover here. The last time that happened, we did get a decent move to the downside for dollar CAD. You know, breaks below 136, I'll be more comfortable on the short side there in the time being. Dollar Swiss, I think dollar Swiss played out pretty perfectly. You know, our targets were 0.92. I thought that was a good area to be getting out of dollar Swiss before seeing any kind of reversal, and it did. It hit that 0.92 perfectly, kind of breached slightly above it, perhaps 92.50s before we saw that sort of dollar decline in the market. Currency strength for me to point into this one for further downside, and I can't really not agree with that at the moment. We've got a very strong bearish engulfing candle. 4-hour time frame has breached into new lows. 0.9100 is the sort of lows that were breached, so maybe that can be retested before any kind of further declines. So out of all these sort of majors, this one makes the most sense to be looking for a bit of downside at the moment, especially as we came into that weekly level of resistance and have kind of rejected that in a way. So that's all I've got for you this week. I really hope you stayed and enjoyed the video. If you did, leave it a thumbs up. Please subscribe to the channel for more, and I'll catch you in more videos this week.